What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on natural gas futures.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart, and I will show you how we caught this movement to the upside that brought us about 17% of potential profit. Then I will continue with the fundamental news. I will show you what news might affect the price action of natural gas futures, natural gas prices. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next. So let's start with the price chart. I made my previous video right here at this point, and I've told you that we were in position from this level of $3.28 mark, and previously I made a call right here to enter the position at $3 mark, and for some of you, some of my viewers, you might caught up to 20% of potential profit, but my assumption was that we shouldn't break this previous bottom, and I've encouraged you to set your stop loss order in the green territory with about 4% of potential profit. And right here we hit this range, and we hit our stop loss order. We booked the profits of about 4%, and then we re-entered our position right here. And at this very point I've told you that we have not more than 6% of upside potential, about 6.88%. And let me show you this video, my previous video that I made about 2 days ago, as you can see right here. And here you can see that from the point where I made this video, I pulled the Fibonacci extension tool and set the price target at $3.85, and we hit exactly this range. As you can see, we hit exactly this range. The highest point was $3.88, and this is how powerful technical analysis is. And as you can see right here, my thumbnail was also for about 7.21% of potential profit from this range. And how I did it, I will show you in just several minutes, but for now let's continue with the fundamental news. Let me show you this article that was published on naturalgasintel.com, and it was published on April 19th. And it says, natural gas futures pair gains as traders small late April chills. And let me quote you further. Natural gas futures paired their recent gains in early trading Wednesday as the market continued to mull the impact on balances of a chilly late April weather pattern. And let me quote you further. Technical analyst Brian LaRose wrote, still peg the 50-day moving averages as the immediate challenge. These moving averages are presently converging with the upper Bollinger Bands, run into resistance, and Henry Hub has the potential to be violently repelled. Gains over the past 3 sessions could be attributed to some combination of recent colder forecast trends, LNG export strength, a dip in domestic production, and seasonal buying ahead of summer, according to Nat Gas Weather. It's worth noting, on Tuesday, the European weather model shed 11 total degree days, and there was no reaction by natural gas markets, natural gas weather said. So, as you can see, we have some discrepancy in between the weather forecast and with the price action of natural gas. And definitely this shows how important technical analysis is, because we caught the exact top of this price action, and as I predicted in my video, we have this retracement. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, first of all, let me remind you that we are on ticker symbol BOIL on 15 minutes time frame. And why I chose this ticker symbol? Because it is a leveraged ETF, and as you can see, if we measure this movement from its lowest point on April 14th till its highest point, so it is at 32.21%. And if we switch to natural gas spot prices, we have the same price action, but it gained only 23.11%. And natural gas futures also gained about 21%. And this, as you can see, is quite a good ETF because it has more volatility. This means we might have more profits in the future, but we also have high risks with this asset. So, and let me show you what is the structure right here. First of all, again, let me switch to natural gas futures natural gas spot prices, and as you can see, I drew these two lines as the ranges of support and resistance. And here my anticipation was that this range should hold as the range of support, and it held perfectly well. This was the bear trap, and we hit higher targets. And we have almost the same price action right here, but I drew this parallel channel for its price action, and my main assumption was that we have to respect this channel as well. And we hit, as you can see, we hit this range, upper border of this channel as the range of support at this point. But if I connect precisely these two tops, as you can see, we have very good reaction as the range of resistance right here. And we also have two touches of this range right here. This means this line is also legit range of resistance, and we can rely on this range in our technical analysis. So let me show you BOIL ticker symbol in details. Let's switch to 5 minutes time frame, and let me show you this breakdown. So we completed first wave right here. The second, let me show you the second, the third wave is right here. This is the first wave, second, third, fourth, and fifth wave. Next one, let me adjust its degree in order to stay in line with this previous wave. And the fifth wave is right here. Somewhere here we might have first wave, second, third, fourth, and fifth, and it is the ending fifth wave diagonal. And we completed the entire wave from the bottom to the top, because 5 waves on a smaller scale, it is 1 wave on a greater scale. And let me delete these tools, we don't need it anymore. And let me mark this movement to the upside. This is the first wave, second, third, fourth, and fifth. And right here we are in the retracement mode, and because of the completion of the entire wave to the upside, we can project the levels where we might land by putting the Fibonacci retracement tool from its lowest point to its highest point. And let me adjust this tool to lowest point right here. And what do we have? As you can see how powerful technical analysis is. Right here we have a perfect touch. First of all, definitely we broke 0.236, and we have less than 10% probability to see the trend reversal from this level. Then we broke even 0.382 Fibonacci retracement level, but we have a perfect reaction from 0.5. And on top of that, 0.382 became the range of resistance, as you can see right here. And here this touch is extremely technical as well, because it is the most probable range of trend reversal. And from this point we have very high chances to hit higher targets if the retracement is done. And I have to say that I have some doubts that we've finished this retracement, but in some cases, yes, it is a quite good potential setup for the next bull run. And what should we do? If it is the case, if we completed the retracement, and probably we might have, as you can see, 1, 2, 3, 4, 5, it is our A wave. Probably it might be the B wave, and this is the truncated C wave. It is possible, but also I have the second option that this is the A wave, this 1, 2, 3, it is a B wave, and we have to see one more leg to the downside to complete our C wave. And as long as this pivot holds, we can assume that this is our main count. But if it breaks, we shouldn't break this bottom, because in this case it invalidates the entire count on a bigger scale, and we will not hit higher targets. Let me show you on an hourly time frame that our major target is right here. Let me show you from this range, because I pull the Fibonacci retracement tool from its swing high at the very beginning of March to its swing low. And we have these levels, as you can see, 0.236 at $4.17 mark as our main first price target. That confirms at least a bounce to unload this entire movement to the downside. Second target is right here at $4.89, but we might anticipate the next movement to the upside as long as, let me show it to you, let me show you this in details, as long as this pivot holds. And on a slightly smaller scale, we shouldn't break this range, and this means we have a quite decent setup. Let's switch again to 15 minutes time frame, and let me show you what is this setup. So, with the assumption that this is only the first wave and this is the second with the perfect touch of golden pocket range, we have this retracement, and as long as this pivot holds, and this means we have about less than 4.5% of downside potential, because we have to put our stop loss right here. We have an upside potential, and let me show you what probable targets might be. I pull the Fibonacci extension tool at this time from the bottom of the first wave to the top of the first wave and to the bottom of the retracement. And with the anticipation that we should land the top of our third wave, and the most common ratio of this wave is 1.618, we might hit $4.85. So this means as long as this pivot holds, we have, let me show you this tool. It is a long position. We have about, let me show you in details right here. So downside potential is not more than 4.5%. Let's put it right here. And the upside potential is right here at wait a second, a bit higher. $4.85, which implies 43% of upside potential with the risk to reward ratio of 9.73 to 1. Very good risk to reward ratio, and this is a perfect confluence with the 0.382 Fibonacci retracement level at the price point of $4.89. So definitely it is a quite good setup, and if you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life, I'm crazy, I'm